Afternoon, traders. Happy Wednesday. Welcome out to the hump, the middle of the week. Wonderful Wednesday, Dennis says. I have to agree. You want to know what's wrong with today? Absolutely nothing. Welcome to the Tradespoon live trading room, stocks and options, closing bell. My name is Scott. I will be your host. It's light today. A little bit light. Markets markets got a bit iffy. We talked about this. All right, we just had 4 or 5 good trading windows in a row. You know how much I have enjoyed the accuracy that the cyclical market has demonstrated as of late, really moving in lockstep with the cyclical nature of what we've seen on a composite level from the past 30 years. And Wednesday, August, August into September can be definitely sideways to, I'm not going to say bearish, but consolidative, if not possibly corrective. And even in the context of a nice strong uptrend, a correction. And remember, when I talk about these things, I'm very specific in my definitions. When I say bear market, I mean 20% off the highs. When I say correction, I mean 10% off the highs. When I talk about recessions, I'm talking about 2 consecutive quarters of negative economic output. That's all I need. If that's what happens, I don't need the committee to declare it. I just need that. So yeah, we're starting to see it. It looks different. If you posture the market, I'll talk about that a little bit. My posture dropped. I was a 5.5. I'm down to a 4.75. Big enough, right? A half a point, I hardly blink. A full point, and I'm going to be like, whoa, what's going on? So that 3/4 of a point drop was like, okay, still bullish. Nothing has gone to weakness. It's just less strength. Weakness, I think, would potentially become a bear market. Less strength is what would be a deep consolidation, 4 or 5%, upwards of a correction, 10%. We'll look at what those levels are. I mean, when I show you what a correction looks like, you'll be like, yeah, that looks a little nasty. That's just a correction. So yeah, we definitely want to talk about that because I am still bullish. And I do think that ultimately the market's struggling and not well today, but struggling to hold support. If it holds support and bounces, well, then that might be the opportunity then to put some bullish trades on. But for me, it's already less and smaller, less bullish trades. The fact that my posture dropped, the fact that we're seeing this evidence of less strength, the fact that this is what we tend to see in August and September, yeah, dial it back a little bit. There's nothing wrong with that, right? Dial it back, less risk. A manager trades a little tighter, move stops sooner, take profits sooner. I'm not looking for 6 or 7 days. If I get 3 or 4, I'll be like, done. Take half, tighten the stop. Okay, now if we get 6 or 7, hoorah, we stayed in half. But if it turns around, we've managed the trade well, right? That's what I'm thinking about in this context that we have in this market right now. Be water, my friends. We are water. We adapt. Otherwise, you'll be the blade of grass under the lawnmower. Okay? Did I introduce myself? My name is Scott. It's nice to meet you if you're new. Pleasure. Pleasure's mine. Head trading coach here at Tradespoon. Ted says, still no hedges for you. That is a negative, sir. And we'll talk about what exactly I'm looking for to get those hedges on, because if you look at the VIX, you know that 100% I'm like, oh, right? Oh, something's developing. Let's be ready. So, trading for a while, teaching for a while. That's me. Here's the disclosures. Be careful. It's your trading. Own the results. But be careful out there. Manage your risk. And let's get into it. Ted starting with great questions right from the get-go. We're a little light, so I need Little lighter means I need a little heavier participation on an individual basis until maybe people are just a little late today. It's a nice day. Starting to get a little bit of a cold, crisp at night out here in Utah. You can just sort of tell, like, ooh, that's a little colder than it has been at night. So I feel a tinge of fall coming on, I think. Okay, what are the markets doing? So let me refresh. Today we opened basically flat, sold off quite a bit, and then we recovered, at least as of now, most of it. We're still down 0.25% on the S&P, down 0.08 on the Dow, 0.7 on the NASDAQ. Well, the stalwart of technology, we've been noticing that there's been some concerns there. A lot of the momentum that we've seen has really come more from industrials, has been probably the strongest. That's, I think, where my best trades have come. Industrials still strong. Still a little bit of strength in some consumer cyclical and some communication services. And there's smatterings of strength in technology, but yeah, that's part of the reason why things have stalled out a little bit. I don't think it's quite as bad as this lady makes it seem. That's a little dramatic. It's marginally down day. Oil's up again. We're definitely seeing some upward pressure in oil prices and energy prices, which that's not helpful when it comes to inflationary pressures. What else? CPI preview. Inflation expected to have ticked higher last month. So that's a little bit of higher inflation than expected, and I think you're going to see this number here. This is our Fed Watch tool that is giving us an indication of the probability of what the Fed is going to do. What is the market betting? As of right now, 86% probability says no change. 13% says up 0.25 point. So certainly there's no thoughts of cutting, although people are already talking about, the Fed's going to have to cut by, end of Q2 2024. We'll see. I don't think it's necessary to speculate about that. Let's just worry about the next meeting, which is occurring in 41 days, 2012. We're down to 6 weeks already. Just that fast. No. Yes. 6 weeks. Not long away. What are they going to do? And that's what we're thinking about. Well, inflation is certainly something that they're looking at. What CPI numbers would move things for me? Let's look at the numbers. Let's dive over here. So we are expecting, here's the thing. That's already in the expectations. We're expecting the consumer price index to be flat. The core CPI, which measures slightly different, to also be flat at the exact same numbers. CPI year over year is expected to tick up from 3 to 3.3. We don't love that. Now, core CPI year over year is expected to drop from 4.8 to 4.7. If we had 2 or 3 of these come back higher than expected, and by more than expected, I think we sell off. If we get as expected, I don't know. That's a great question. If we get better than expected, I think we may have a bit of a rally, but that's the dangerous rally. And I say it's a dangerous rally with full implications that I would likely going to put some trades on, because if the market happens to shoot, I want something in place, and I'm still overall bullish on my posture. I'm still at 4 3/4. So yeah, and then the next day we really don't have a good read on what they're expecting for the PPI, but I think the CPI numbers are more looked at anyways. But that's what we have tomorrow. We have jobless claims that are all, it's still now back to just firmly in the low 200s, 225, 230. No issues out of the employment, the labor market just yet. But we do have, and we have consumer sentiment also expected to tick up. So they're like, oh, they've already forecasted that it's at 3.3. If it comes back at 3.5 or 3.6, then it's like, oh yeah, we're definitely getting a rate hike, right? If it comes back at 3.1 or 3.2, it's still above what it was, but it's better than expected, which means I think the market processes that just fine, and it won't have an influence on tomorrow's price action. So, it'll be interesting to see. I think tomorrow's morning report's more important than the one Friday. So we'll meet Friday morning. We'll see the PPI, talk about it, and talk about the implications of tomorrow's numbers. But next week we have retail sales. Nothing Monday. Retail sales Tuesday. Production utilization Wednesday with some Fed meeting minutes from the July meeting. Nothing really Thursday, nothing Friday. So it's pretty light. So whatever happens with this inflationary data, that's likely what we see. So let's talk about what the model sees for the SPY. Yeah, a little bit not great. That it's likely going to bounce, possibly stall, and then drop to a lower high. That's consolidative. Consolidative. Do we have a sense something like that is occurring? Yeah. Why? Well, first of all, we had a bigger sell-off than we've had, and we had with volume. Look at these two big spikes of volume. Big spike on a gap down selling day, big spike on a selling day. Now if you look, we're in the buying cycle. The stochastics turned up. We're in the buying cycle. What's the market done? Nothing. A few stocks have moved, not much. So right now we're already seeing less strength from the buyers, more strength from the sellers than we have in quite a while. So yeah, that's concerning, right? It's concerning that we might actually see it bounce from here and get a little. We've got a hammer after a doji. We might see it move up a little bit, but if it moves up a little bit and stalls out and starts to fall, that's where it's concerning. Now let's talk a deep correction. Okay, a deep correction. Let me get a calculator. How's everyone feeling? Right? How are you trading? You holding up? Did you trade smaller? Did you trade less around the this week? What are your thoughts there? Let me get where's my calculator? I thought I called it up. Okay. So we're going to draw these levels so we just all have a sense of it, right? Come on, where'd you go? There it is. I'm just going to round up to 460 for my high. 460 times 0.9. What's that? That's a correction all the way down to here. 414. That's the correction. So as you look at what we've done in the last 6 months and what a correction would be, right? That would wipe out everything we've gotten since it broke out in May. And that's pretty good. It's not terrible, but that's you can see that's going to take at least 2 big moves to the downside if it were to happen, right? It might come down here and then go up, and then that's pretty nasty when you think about it. Now, what would a deep consolidation be? For me, a deep consolidation is 4 to 5%. So if we take 460 times 0.96, that puts us around 441. That's 4%, right? 441 is here. And if we take it 460 times 0.95, 437. 437 puts us right around there. So that's deep consolidation. So it could be a double dip where it goes up, pulls back, and then this is all that happens. Or it could be that we try to pull out of it, and then all of a sudden the panic sets in and we see it drop on down, right? So am I willing to trade bearishly there? Yes, that would be automatic. Am I willing to trade bearishly over here? I would say even more so. As this is happening, my posture is declining. I would already be out of all my bullish trades. It's much easier to speculate at that point. But Ted said no hedges for you. Well, not yet. And the reason why is because the VIX hasn't triggered it. What would trigger it? Well, if we see a lower high on the market, what are we likely to see on the VIX? A higher low. It's an inverse correlation, right? So this just kind of gives you a sense, like what would a correction be? What would a deep consolidation be? I mean, it could be 6%. If it was 6%, that would just add a little bit more down here. So this is that 4 to 6% range versus if it recovers and then falls again even harder, that's probably what it would look like. And that wouldn't be terrible. I mean, if we switch this over and find those same numbers from a weekly chart, 414 is here. About here, which is not that far off from these old highs, right? Old resistance, new support. That would be a hard one. That's pretty big. The deep correction or the deep consolidation, I would say, looks like this. So if we saw something like this and then it turned, when is it turning? That's interesting. In October, right? In October. What tends to happen in October? Well, let's go look at the cyclical number here in just a second. But is this a feasible and reasonable thing within the context of a bull market that we could try to capitalize on in the short term for a move or two to the downside? Because it could get worse, right? It definitely could be, where it comes on down here, and then that's still a higher low. That's the same as this kind of brief little transition, much higher than this low. That's reasonable for me, right? I mean, maybe from there it does something like this and then it starts moving again. Okay, fantastic. Okay. Let me know if you have any questions about that. Why am I thinking August, September, October, etc.? Let me show you. Sorry. Neutral to slightly bearish. I'm expecting the Qs to be even more. The market nailed this one with Apple or the model. We haven't seen it like this yet with all of the NASDAQ, but a couple of its key components. It's definitely looking for corrective behavior. When we look at IWM, so sometimes we have three things going up and the NASDAQ going down, and we're like, but now we have one going sideways to down, IWM going down, QQQ going down. I would imagine the Dow is going to look a lot like the S&P, kind of more neutralish, and that's exactly what we have. Two neutrals, two bears. What does the model tell us? Yeah, be careful. Don't be hasty. Don't be quick to. We've now entered. We talk about this. The question that or the mistake I tell people a lot about is over trading, and the question I get is, how do I know if I'm over trading? And the answer I give is, if you don't know that you're absolutely not over trading, there's a good chance you are. Well, I say that because there's no like 6. If you have more than 6 what? 6 trades, 6%? It's contextual. What one from May, June, July? I said this is a harder market to over trade in. Get some trades on. If it goes against you, be patient. It'll come back, and that's how it worked. Now, all of a sudden, my posture's dropped, and I'm saying, hey, you know what? This market just immediately got a lot easier to overtrade. So I'm not going to put a bunch of trades on and take a bunch of risk. If I put some bullish trades on, it's going to be a couple. If I get some gains, I'm going to take it and tighten my stop. I'm going to be absolutely on the lookout. We're going to go to the VIX next, I promise. Let's finish here. But yeah, what the model shows us is concerning. What do we see in the seasonal charts? Which have been moving, right? This goes up, this goes up. This goes sideways, this goes sideways. Starts jiggling around, goes up again, starts jiggling around, goes up again. Pulls back a little, pulls back a little. Up, hook, up more. Up, hook, up more. I mean, look at that. What we're doing now versus what we've done. What happens next? It comes down. It comes down, and then what? And then it gives a little head fake right there. And that's what we're saying we're concerned about, is that it goes up a little bit and gives a little head fake and then drops more. There's the deep consolidation. And if we get less rally over here and then a bigger drop over here, this could be what gives us that minus 10% correction. What we've been talking about is all set up right in this area here. I've liked it for a while. It's now showing 84%. Great. I agree. There's enough here that we should be paying attention to this. So again, what does it tell me to do? Be scared, run around, and scream the sky is falling? Nope. Tells me I'm still going to take it because it may not do this. It may make a bullish run. So I am going to have a couple of bullish things on. But like I said, I'm going to manage it tighter. Take profit sooner. Tighten stop sooner. Take less trades. Be prepared to put something on the other side with a hedge, and then possibly even some speculative trades to the downside. That's how I'm preparing for this. Yeah, I would recommend you consider the same. But yeah, I'll tell you what, this seasonal cycle been strong, been money, super helpful so far this year. Let me know if you have any questions, comments, or concerns. Otherwise, we are going to jump on in. Let's get back. We got to get a quiz. I'm a little late. No one's asked. That's a full hammer pattern right at this support level. Right? We're not like, oh my gosh, what am I going to do? It looks like it definitely could bounce from here. But my concern is if we only bounce for a few days, we get stuck, we roll over, because what's likely happening at that same time? Well, if I pull up the VIX, this is concerning. Now, I was asked if I don't have a hedge on now, and I don't. And the reason why, here I did. Higher, low, got the hedge on. I actually ended up breaking even because I wrote it back down because I followed my rules, but it negated. And you'll notice here, there was no higher low. I did not have the indication that I typically would look for. It's a regular high here, right? It's a regular high. But, and here's the but. What I do see happening now is that we popped without, it didn't give the warning, and it popped. It wasn't a bad pop. Based on what this has done, which realistically, it's very, very similar in their extremes. This one's gotten a little higher, but when you look at the bodies, the pop that we're in right now is a little bit worse. That's telling me that the institutions got a little jittery, like, oh, a little skittish. It popped up here, and now what is it doing? It's coming back down. If it doesn't come all the way back down here, that's the setup. Anywhere starting from now in this range, if it comes in here and turns around, boom, boom, and this turns back up, that is a higher low. And the concern there, I'm going to switch colors to really illustrate this, my favorite light blue. The concern is that this doesn't escalate like a channel. It escalates exponentially, right? So, I mean, it might be something like this where it goes up and gets there. That makes sense, right? And then if it pulls back again, then I'm thinking we end up here. So the first one corresponds to a deep consolidation. The first little blue spike up. The second one, where the VIX, if the VIX were to climb to the 30, 31, that's where it would be for a correction, right? We know exactly how this would play out. Now, I'm not saying Blue is what I think is going to happen. I'm going to wait to see. But if blue is going to happen, it's going to start with that first long red arrow pointing at that higher low. So I will absolutely hedge that. If I get that, I will likely shut down any remaining bullish trades that I have, and I will possibly look for a secondary bearish trade. If it goes up, hits 22, pulls back, I'm going to do it again. Because any puts you buy, even at 18, they're still not bad, especially if it gets to 30, right? If you buy it at 15 and then again at 18 and then it gets to 30, I promise you the impact that increased volatility will have, Vega, right? Vega is the Greek that helps us understand it. Phenomenal, off the charts. So that is the number one thing I'm watching for right now. That is a classic, reliable signal. I talk about it all the time. I absolutely have concerns that this is setting up right now. So let's just see what happens, shall we? Quiz. God, I cannot get to the quiz today. I'm just yammering along. Just having a merry old time. I hope you're with me. All right. I asked, how are you feeling? No one responded. So I got to tell you guys, I'm a little concerned. Either you're feeling a little tired, didn't have your afternoon coffee, and you're subdued, or you're not feeling good and you don't want to say it. I'm leaning towards it's just the coffee. I hope everyone's feeling all right. Trading's been good. I hope it's been good for you. I hope you are seeing what you need to see to make the right decisions. Let me know. There you go. Randall says, my boss makes me work too much. Understood. These are my lines for today's game. 447.50 basically and below C. 447.50 to, what is that, 10? We'll give it 15, 65 cents. 448.15. This is your range if you're a B. And A's, this is what you think. A, B, C. Give me your thoughts. I'm going to go early. And I'm going to put my arrow here next to A. I think we're going to rally. We're going to rally. It's going to give us the full hammer where we get all the way back up into here or close to it. Ooh, big old hammer. Right? Something like that. I guess it would be more of a filled in hammer, but still it's a hammer. It's still a hammer. Maybe even down to 448.50. That's my prediction right there. Yeah. Fred is a B minus. LK is a B. Martine is a B. Randall is a B. Dennis is an A. Okay. I'm gonna pause. I want some more answers. C, betting on paranoid longs, Ted said. Okay. I mean, I can't disagree. I need to see what? I need to see Stella. Stella. Stella says sell off, but finish at, oh, that's DIA. That's not going to fly. Those numbers aren't going to add up. Jeffrey says B. Where are we? Oh, daily. Gosh, come on, Scott. Get it together. Oh, well. 446.92. 446.92. Stella is a C with Ted. So me and Dennis are A's. Ted and Stella C's. Everybody else is a B. Hurry and get it in if you want to get it in. Boy, C's starting to look better. Maybe I should call it early. I'm trying to jinx it. Maybe I should call it early and just give it to C. The market likes to listen to me, and so I'm trying a little reverse psychology. We'll see if it plays out. This is for science. Okay. Let's talk about the watch list then. We have a fairly diversified watch list full of what? What has been uptrending sector leaders, so above the 50-day moving average, above the 200-day moving average. More and more. Yep, that's it. I'm close to calling it. I'm not. I'm going to let it go. Okay. Market leaders with good volume, good liquidity on the options. So I want it to trade at least 2 million shares a day. I want it to be above its 200-day moving average, above its 50-day moving average. I want it to be above $10 a share. I don't like trading low price stocks. Some people might not go that route. They might be okay, like, yeah, I'm fine. I'll trade low price. Why not? If I did that, I would probably be more inclined to just trade the stock than the option, because the options can go ski-wampus much easier, I find. That's personal, anecdotal, not any hard evidence or studies conducted or read. I just, from my own experience, that's what I tend to see. So I'm trading based off that. But that's our watch list. Now, what else do? We put a sector filter. So when I do a market posture, one of the things I look at is sector rotation. I look at the S&P with the sectors over 9 months, 6 months, 3 months, 1 month, looking at who's strong, who's getting stronger, who's weak, who's getting weaker, who's transitioning from weak to strong, from strong to weak. I look at it over multiple time frames and come to an assessment of where's the money flow, where are institutions putting their money. Had been for quite a long time, it had been technology communication services. That is where the bulk of our focus has been. A lot of Apple, a lot of Nvidia, a lot of Meta, right? Microsoft until it got to earnings, a lot of things until we got some AI stocks out of that technology. So there's been a lot there, but all of a sudden we're like, oh, not as much. I'm still watching them, but as you go through and you look at what's struggling, you'll see it's those. We've looked at consumer cyclicals. We've gone a little around in circles. Amazon's always on the list. We've been watching. What else have we been watching? PHM. Would Pulte be industrials as a home builder, or would they be consumer cyclical? I'm not even sure, to be fair. Yeah. Okay. All right. So let's take a look and see what sectors are holding up, what stocks are looking good. What does it all mean to us? This is Apple. I mean, Apple, that's a significant drop. We've dropped 20 points, 19 points. We dropped about 10%. The heat map. Oh, yeah, let's take a look at the heat map. Got it up. I think I do. I've got it up. Heck yeah. And is this reloaded? Yeah. Microsoft, Apple, we've bailed on that. A lot of these chip stocks aren't as good. Some equipment, some software here and there. We've been okay with that. You can see there's some in there. Much less, though. There's weakness across the board here. Consumer defensive, we've seen some strength there. Not in utilities, only in defensive, and a little bit in healthcare. So we might want to buff up a little in something around here. Walmart, Costco, Coke. Financials have shown a little bit, but it's just very iffy, right? It started to show some strength, and then it had a little blip, a little failure to launch. All of these signs are not like, oh, let's look harder to find trades. It's like, why? Why are you looking so hard to find trades? There's no reason to just trade for the sake of trading. If it's there, trade it. But the fact that you're finding less, seeing less, that's all information. That's going into the stew. Put it in. What does it taste like? Tastes a little bearish, quite honestly. If not bearish, at least consolidative or corrective. That's a misstatement. I don't mean bearish. I mean slightly negative in its momentum and its downturn. Okay. What else? So let's get to the watch list then. Apple, Aflac. Aflac looks great. I'm absolutely willing to trade it. If this thing can stabilize as it gets down to 74, yes, I love it. I absolutely would trade this. I will absolutely put this on my list. Not Apple. Apple has to go through a whole thing now. It's got to go through a whole thing. AI also has to go through a whole thing. What is that whole thing, Scott? You might be asking yourself. Well, let me answer. Person who asked that question. This is the consolidation for me now at this point. If it drops and then comes back up and then just drops, eventually it's got to break this. I would love when it does to actually see it take out the old high. Then it's got to consolidate, and then I'm a yes. And again, that whole thing it goes through is actually a left shoulder, head, right shoulder, inverted head and shoulders. I don't need to wait for the neckline to break. I'm willing to take it on the higher low. And if it gives me that, then all of a sudden I think we're back in business. Hoorah, right? That's what I'm looking for. Apple has to do that. AI has to do that. AIG does not, but AIG is kind of a grinder. So I don't know. That's at your discretion. AMAT. I still, even though it looked like it kind of tried to give a little bit of a signal and then it's here again, if this level holds and we turn and this stochastics crosses, that's still good. The only problem I have is you're now real close to earnings, right? You're now like 817 aftermarket a week from tomorrow. So yeah, even if you get the signal by Friday, you would get Friday and then you would have 4 days and it would be after a weekend. It's iffy. It could happen, but I would say that's iffy, right? Iffy. Amazon. I still like Amazon. Its earnings came back spectacularly. I contributed heavily to that. Buying all kinds of dorm and college things, and aren't they supposed to pay for themselves soon, like at 18, 20? I read that in a magazine article once, but I haven't found it to be true yet. Someone tell me it's soon. Even if you're lying to me, just be like, yeah, like another year or two, you're done. They'll actually start paying for your dinner. Tell me that. Just lie to me and say that's what happens. I do like this. And I think anything, no one's lying to me out there today. It's so quiet today. Make it a student loan. 20 to 30 years, Dennis, that's not what I was looking for. I would trade that. Right? Anyone else? I would say, yeah, that looks great. It's ready to go again. My daughter is looking to go to medical school to be either a surgeon or a pediatrician. I'm like, yeah, retirement is going to be me in a trailer in your backyard. It's going to be amazing. She thinks I'm kidding. I'll just be back in my trailer. I'll be trading, hanging out, grandkids popping in. Hey, it's gonna be. I'm not even kidding. That's like my dream. Maybe a tiny house, not a trailer. I'll make it permanent so she can't like pick it up and move it on me. Boeing. There's some strength in industrials. Anyone trading in industrials? You'll see it here and in Caterpillar. The signal came here. There's not a lot of follow through yet, but there's some. I like industrials. Industrials has been strong and good. This is another one. This one really just kind of struggling though on BLDR. BX, it's now a consolidation. What does that mean? It means that this has to go through a thing. At this point, I'm expecting that it's just going to meander on down this path. And if at any point it gets above and then drops right back into it, back in this path, it's got to break it, hold it, bounce it. That has to happen. Okay, Caterpillar. What time is it? We're good. Caterpillar, same thing. It's turned. This looks pretty good. It's iffy. What am I going to do? I'm going to manage it with a Heiken Ashi. What does Heiken Ashley say? Boom, move your stop. Tomorrow, move it again. If it gets up in this area, 293, take half. And then tighten it again. Right? Manage it a little more closely. Nothing wrong with that. There is nothing wrong with that. CPRT failed. Now what? It's in a consolidation. Draw the line, connect the dots. Your reference will come out of that. Boom, we're ready to go. That's all I ask. I don't feel like that's too much. Go back to a lot of different things when they first did that little breakout shimmy and what happens afterwards. A lot of good trading comes after that typically. DIA holding up. DKNG is not. There's nothing there anymore. There's no way people are like, oh, do you think it's bottoming? I don't care. I'm not trying to trade the bottom. I'm not trying to trade some dead cat bounce. Not interested. Not at all interested. Flex. That's concerning, right? Like it's trying and it just can't get going. Gold continuing down. IBM. I still like IBM. I like IBM anywhere above about 139. So if it can stabilize, I would trade IBM to the upside. But you can see my list is getting smaller. Organically, I'm going to trade less. Organically, because there's just no trades there. I'm not going to force a trade. IBN, nothing there for me. ICE, nothing there for me. But I would tell you this, the consolidation line I would draw is here. To me, that's kind of an anomaly, and really it looks more like this. Cancel that out one day. That's what we got. I'm not interested in that until I see a break at this point. I'm going to probably start bouncing some of these. So if you've already bounced some or you're thinking about it, I agree. ING, I'm still considering. We'll see what happens with it. IWM, it's broken lows, but anything above this, I'd maybe still consider. Is that what you're looking for? It doesn't look terrible in an industry that's a sector that's kind of iffy. Yeah, probably not. Meta, Meta looked like it was going to hold up until today. I'm okay as long as it stabilizes and turns soon. It doesn't look great today. Morgan Stanley is a no. Microsoft. Is a no. Consolidating. MTG overextended, but I like it. Wait for a consolidation. There's still some strength out there, but there's enough of a uncertainty that you can feel that it's tenuous, like this, just kind of sideways. That don't force. We've already drawn our line of consolidation here. It may be accelerating now, and if it comes up and then drops again, then it accelerates even once again. I'm fluid, but it's got to do something like that before I'm willing to trade out of it. Yeah, it's a simple pattern. Pulte Homes still looks pretty good. It's a little overextended now. Obviously, not going to trade that, but I would on the pullback. Oh, I want it so bad for PLTR to hold up. 2 days ago, I'm like, okay, it can do it. Look at this. Look at this hammer. Old resistance. It's going to hold and bounce. And then the next day, I'm like, well, it's still trying to hammer. It's not holding the old one, but it's definitely a higher low. Hopefully, it's going to bounce. And today, I'm like, never mind. Never you mind, PLTR. We're now going to consider this the consolidation. So even if it were to pick up, my thought is it's going to hit it and it's going to come down off of it. Am I willing to trade that bearishly? No, not yet, because I'm a 4.75 still. Right? I'm a 4.75 still. If the market starts to show a little more weakness, then yeah. And I would look in technology and communication services and AI in particular, because that's where things maybe got a little ahead of themselves, as the markets tend to do. Yeah. Okay. I'm disappointed. Yeah, I'm not angry. I'm just disappointed. Somebody said, take a look at your old friend. Where is it? Dennis. Nicola. That feels head and shouldery. Is that a verb? An adjective? Head and shouldery? Yeah, that's the adjective. It could catch a little bit there for sure if it starts to turn. I mean, it's hooking, but it hasn't crossed or turned yet. But I'm definitely going to be looking for that to come on back down. I don't know. Maybe like, do you short it? Hard to borrow. Hard to short that. I don't love options on cheap stocks. Interesting, but maybe not something I would trade. QQQ doesn't look terrible, but it's definitely looking worse. Worse for the wear. RCL. Oh, look at that head fake. Look at that little head fake. RCL. SMCI bashed. Oh, it took it on the chin. Yeah, you're seeing that the AI may not be all it's cracked up to from a profit standpoint. Yeah, a lot of prospects, a lot of opportunity down the road, but maybe not yet. Not yet. Okay, I like to say not yet twice for dramatic effect. Did it work? I was testing that out. Did it feel a little like, oh, goodness, not yet? Just let me know. It's quiet again, too, so maybe a corny joke will get someone replying to me. Come on, people. You're better than this. I expect more. Didn't want to have to say it. I don't know. Kick it off the list or watch it and see if it dead cat bounces. I'm not even getting responses from that. Tough crowd. SPY. Looks like the C's are going to be right. And Stella. I think the C's are just Ted and Stella. Not looking good. Still inside. I mean, like anything of this low is 450.70. We're a little bit above that. We'll see. Yeah, it's starting to feel a little iffy about if it's going to hold up or not, and could be the precursor to. No, let me get that. That's not what I wanted. That's still not what I wanted. I mean, it's not yet, but tomorrow could be, right? I mean, just that fast. Just that fast. If this closes above, might be the body. For some people, it might be the shadow. I would be a body. If I saw that, even if this only turned a little bit, I would take it. A higher low is defined by price, not by stochastics. This can help confirm it, but I don't need it. So there you go. Even though everyone's so quiet, I'm still giving out gold. Gold. Tesla. Consolidation. Stella did nail it, right? Consolidation here. This is an anomaly. I don't need it, but that's my consolidation. I have zero interest. Anything in consolidation, I have zero interest. If it doesn't go through that breakout, it's a no-brainer, 100% pass. Pass and wait. UPS, pass. Oh my goodness. We love this. And we're like, just give us a chance. Boom, 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 boom. Really nasty. Really got ahead of itself. This could easily be a $20 stock. Dead cat bounce, roll over. That's a maybe for me, especially if the market starts. So if the market starts getting into a, like we think it's going to be a consolidation or correction, I'm going to try to find some of these like high flyers that are about to take a dump. I love a good high flyer. Shark frenzy up, shark frenzy back down. My love affair never lasts long. Here's Visa. I guess it looks all right, but I'm not really what I'm looking for. The VIX, we talked about it. Okay, I really would like this to hold up. I would like it to hold up at or above 73 to 73.5. It's at 75. We'll see. Big sell day, not a lot of volume. Average volume is 5.1 million. We're at 3.3, 7 minutes. Okay, I think this could easily recover. That's one I'm looking at. Wells Fargo, less so. Energy's looking stronger. Financials not really holding up that great. Industrials trying a little better. I'd say industrials are stronger than financials. That's how we've been seeing it here for a while, quite honestly. Then we have XLP. That looks okay. More okay than I would want it to. So if we were going to do some defensive trading, this might be where we would look to put something on. Not here, though. Not in utilities. Utilities looks like this is a financial. Looks pretty good still, honestly, but we're close to earnings. That's not a lot of signals. Not a lot of signals with the potential for a VIX hedge trade to show up. What does that tell us? It tells me I really shouldn't be trying to trade bullishly. I should be listening to the market and saying, all right, I might take a stab or two, but it won't last long, and I will change directions quickly if the need arises. Whew, okay. Let's go look at the VIX one more time and look at the internals of this thing as it has turned around to some extent. To some extent. Quite a bit here, right at the end, right? But we've seen it do that and then come down again. We've seen it pop up and come down again. So let's just keep an eye out on it. And we'll take our final look at the SPY. I think we'll be fine calling it early. I'll give you a couple of minutes back today. Woo! Man. It tried right here. We're like, oh, maybe it's going to turn. Dropped some more. What were our numbers again? 447.50 by 448.15. I think that's what it was. Yeah, we were like, maybe there. Oh, it just smashed it on some heavy volume. All right. Well, that means that we're no longer have any kind of a hammer looking. That looks like an engulfing. It's not all engulfing the whole thing because that's kind of a high wave doji, but and it doesn't look like it's going to get more than average volume. I don't know. It's looking dicey out there. Be careful out there, my friends. Manage your risk. Have a plan. Stick to your plan. Make sure that plan is oriented according to current market direction, and we'll be fine. I will see you guys on Friday morning. I won't see you tomorrow, but I'll see you Friday morning. Inflation data tomorrow, inflation data Friday. We'll talk about it. We'll close this week out, and we'll see where it puts us. I hope you have a wonderful day. And I'll see you soon. As always, happy trading.